Even though prices for condo apartments in Calgary are up month over month and year over year, I would expect that this property type is probably going to see the biggest declines in prices throughout 2025. Let me explain. My name is Adam Fyfe, your Calgary realtor. If you're looking at finding out what is happening in the other property types here in the city, scan the QR code, it'll take you to my website. Or you can go ahead and click the links in the description for additional value. If you're looking for the buyer's guides, if you're looking to book a call, if you want to know what your home is valued on this market, you want to see what is going on in this city, go ahead and click those links. There's a lot of free information in there where you don't need to fill out your personal contact information. Just go and enjoy the content. Now, this is what the Calgary Real Estate Board has written about condo apartments in Calgary. If you want to read it on your own, pause the video, skip to the next chapter, no big deal. After the first quarter, condo sales reported the largest decline over last year compared to other property types. However, we achieved record highs last year, and the 1,300 sales, almost 1,400 sales, remain well above long-term trends for the first quarter. Relatively strong demand has also been met with significant gains in new listings, causing the sales to new list ratio to fall below 50% and driving inventory gains. As of March, there were 1,700 units in inventory, causing the months of supply to push up to just over 3 months. While the months of supply have risen compared to the exceptionally low levels seen over the previous 3 years, levels remain well below the over 6 months average seen throughout 2015 to 2022. Nonetheless, more supply has slowed the pace of price growth. So, we're still seeing a lot of activity in this market, but now we're seeing a lot of new listings come to the market. I wonder if it's all those investors who purchased during those pandemic years, and now the renewals are up, and they're starting to offload that product because prices have increased. We can see that the benchmark price for condos is $336,000, up $1,900 from last month and up $87 from last year. Now we're still seeing a 2.6 year-over-year gain, but that's down from last month by about 1.4%. Now, as mentioned in other videos, you want to make sure that you're doing the attributes onto that. So if you want to know what the attributes are for apartments, go ahead and pause the video here and you can see that. So let's continue on. This chart is a really good indicator of what's kind of happened over the last 12 months, right? You've got your red bar here, which is your price point. You can see we hit our peaks in July, August. We dipped down going into the winter months. Now we're starting to slowly pick back up. You can see that the sales have greatly declined, and now the inventory is steadily on that increase as well, creating a pretty large gap between the sales and new listings, causing that inventory to increase. So this information here is the exact same information, just in a numerical fashion. So you can see that you've got your sales, your new listings, your inventory, your days on market, which is 36 days is how long it typically takes a home to sell. And then you've got your price point here. So $336,000. So we're only $10,000 under what we were last year. So yes, it is a difference, but it's not as significant as some people might make it to be. It will be interesting to see if we continue to go on this trend of increased inventory, how much that price could drop in 2025 as the market continues to favor the buyer. So here is a highlight of the market itself. So you can see year-to-date stats. You can see we're down 30% in sales. We're down 25% in actual sales volume. New listings were up 16%. Inventory is up double compared to what we were last year, but it's kind of a difficult time to compare to last year because last year was an ultra hot seller's market, especially when you're looking at this 1.19 months of supply versus the 3 months of supply that we're now seeing. Sales to new listing ratio is under 50%, which is indicating a buyer's market. Technically, you can call this a balanced market just because it's just over 3, but with a 48%, it's definitely buyer's market territory. Sales into list price, we were at 100% last year, now we're down to 97, and then days on market average last year to this year, right, 27 days versus that 42. But because we're about 9 days into the month, I do want to bring in this chart here. So go ahead and pause this, right? We're only 9 days into April, but it does give us a couple of things that we can talk about, right? When you start to look at last year, right, you got your sales. So you can see our sales are down, obviously, which is pretty common across the board that we're seeing. New listings is up. Active listings, we have over double the amount of active listings as what we had last year. A lot more selection than what we had last year. The price points is clearly up. You can see that the benchmark price is 179, 279, 279, 327, 336. So that is a pretty steep increase for our market, considering what has happened over the last few years. Now, when some people see this, they think it's still affordable, which it is compared to some of the major metropolitan cities. I don't know what the Toronto and Vancouver prices are for apartments, but they're triple as what they are in Calgary. It'd be interesting to see what their benchmark attributes are, but we can talk about that another day. You can see the total sales. Obviously, it's kind of reiterating some of the stuff here. And you know what? I'm just going to move on. But if you want, pause the video, reach out, ask your questions about this specifically. But what I am going with this is I'm pretty sure we're going to see a slowdown in this market. So let's start to just break down this month, right? March. We did still see an elevated amount of sales, which is great in a sense, right? It's offsetting some of those increases that we're seeing in the new listings. We're still well above long-term trends, right? The red bar here, much higher than what we've seen in years past. But we have to remember these are very depressed years in Calgary, especially for the apartment market. Things were cheap, but not a lot of things were moving. We were at that high 6 months of supply, which was still double months of supply than we have now. When we start to look at the price points, right? You look at 2022, 2023 in the blue and green, under 300,000, it definitely controlled the market, especially in 2022, 2023. Now you're starting to see that shift into those higher end properties, right? You can see last year and this year, very close in the 400,000s, 500,000s are very similar, 600,000s and so on. And you're even seeing some of those small increase in the million plus. You can see just a small little step there for the million plus product here in Calgary. This is the same information broken down into a little bit, I think it's more in like the $50,000 increments. Feel free to pause the video if you want. Now, sales by price range, this is the entire city. So we can see that the $600,000 price range is the most active, but that's going to cover your single family homes, your semi-detached, you're going to dabble into your townhouses and whatnot, where the 300s and under are going to be all of your apartments, which are the second most active in the entire city. So when we start to break it down by property type, you can see apartments are yellow, and it is always going to be dominant in the downtown core. It's very dense in that area. You're going to have a lot more sales in that area, but you can see it's broken down into, let's call it south, west, north, southeast, stuff like that. So let's talk about those new listings, right? Because those are where we're going to see a lot of the price declines come from. The new listings in the inventory. So you can see that the new listings has definitely shot up, right? We're about, let's just call it 600 new listings, more new listings compared to last year. And I don't think that's going to slow down in 2025, especially with all of these mortgage renewals, delinquency rates, tariffs, job losses, some of these things, investors trying to get out of the market. I think that this is going to stay fairly elevated, which in turn increases our inventory. Now, in the total residential video, I showed you that the apartment sector is the one that's definitely bringing up that inventory level. And you can see what we've seen a sharp increase, especially from the last 2 years of our ultra hot sellers market. So with that in mind, you can see the red bar here is the trends, months of supply, we're definitely increasing, right? We're still in balanced territories. We shouldn't see a lot of price movement in a balanced territory, but I wouldn't be a bit surprised if we start to see those 4.5 months of supplies for the apartment market, which is great for buyers who just maybe want to buy their first property as a primary residence. They can definitely get in with a lot more options, find something that's a little bit more suited for you, get a better price on that. But for sellers, you definitely need to make sure that you're looking at your building, your community, the area, because gone are the days of getting a home sold very quickly. Now, what I did here is I went back and looked at all apartments in Calgary, just went back 30 days, and I looked at the new listings. And this is, again, just trying to hit home that point of the ultra sellers market is absolutely gone, right? You can see that on the far right here, I did it by listing contract date. So you can see there actually was one that went up on the market for $900,000 and it sold that day unconditional. Okay, that's a little bit of an outlier. You scroll all the way down and you go all the way down here. You got two more pending, right? One in Dalhousie, one in East Village, right? They're pending, 254, 339. You scroll down a little bit more, and out of the 200 of the newest units on the market, only 5 are pending, right? 4 are pending, 1 is sold. 279, 269. So still that affordable price points are moving quicker, but you've got Patterson, Haysboro, as Dalhousie, East Village, and then you got this one in Earlton, right? So yes, things are still moving. Oh, that wasn't unconditional. I think I said unconditional. It is pending. I don't know why I said that. But either way, things are still moving, but it's a lot slower. So when you're going on the market as a seller, just make sure you understand what you're getting into. So let's proceed forward here. If you want to know what your unit is worth in today's market, go ahead and scan this QR code. It'll take you to this instant home evaluation tool. Very slick tool. It'll give you some updates. You can do it once a month, once a quarter, once a year. And it'll give you a fairly accurate home evaluation for your unit based off of similar units in the area. So let's break this down and start to look at the microeconomic breakdown, is whatever I call it, for individual quadrants here in Calgary. So let's look at here. Sales to new listings ratios, right? Averaging 50%. So you can see that everything in Calgary is hovering around that 50%. You've got even some 39% in Southeast and some 41% in Northeast, indicating a pretty strong buyer's market, right? Northeast. If you're looking at the Northeast, take your time. Find a unit that works for you. If you're an investor looking to offload your property, just be careful not to get stuck on the market for too long. If you're an investor right now looking to purchase properties, proceed with caution. I think that the market's going to continue to decrease, especially in these areas. Here's the benchmark prices. Year-over-year growth, right? We're still seeing 3% compared to last year. That's pretty quickly going to dip down into some negative as we start to combat those highs that we saw in June and July last year. And then you got some prices, right? So here's your month over month of this month and then your previous month. So you can see, just as an example, let's just zoom out here. So you can see as an example, North has seen 2 consecutive months of negative. West has seen 2 consecutive months. Southeast has seen 2 consecutive months. But on the flip side, you can still see Northwest saw a $7,700 increase from last month. So there's still activity, there's still movement. City Center still is seeing a slight increase from last month. So not all communities are going to see this ultra hot buyers market as fast as others. But when you're starting to look at places like Northeast and Southeast, just proceed with a little bit of caution, do your research, and actually go in a little bit more educated. This is where booking a Zoom call with a Calendly link is going to be the most benefit. So with that in mind, you can see here, this red bar is a year-over-year price growth chart. This is a trend line. So we have seen year-over-year consistent price growth since early 2021, right? So we have seen incremental increases every single month, right? Some are higher, right? You got 10%. We were all the way up to 20% at one point year-over-year price growth. Now we've slowed right down to about 2 to 3%. I would not be a bit surprised if we start to dip down to the negatives. I don't think we're going to stay in the negatives for very long, maybe about 6 months potentially, but I would imagine that the Calgary's market is still positioned for some growth. No, it is not the crazy amount of growth that we've seen in years past. There's tariffs to be talked about. There's political elections to be talked about. But I would still argue that we're fairly affordable for the average consumer in Canada looking to purchase property. Okay, I would imagine as well it's the higher end properties that are dropping at a dramatic rate to push that benchmark price down, not the affordable 200, 250s that are pulling it down. It's probably those 600 plus units. So with that in mind, right, we're starting to combat those highs. It will be interesting to see if we reach those highs or if we kind of stay below it, maybe start to dip down a little bit. It's hard to say. But you can see, again, just from 2021, all of the growth that we've seen in this market going from 240,000 to 340,000. That's a $100,000 difference in about 3.5-4 years. So if you're curious about what this is going to look like, you want my honest opinion, we want to dive into the market together, look at different areas of Calgary and what's happening in your building, and just talk about my expectations as to what is going to happen in 2025. Book the Zoom call, right? The Zoom call, the Zoom link is in the description. Go ahead, put it in there. I promise I'm pretty easy to talk to. Thank you very much for everyone who's watched this. Comment your questions. I love seeing those comments, even if they're good and bad. Thank you. We'll see you on the next one. Peace.